Welcome to Moneyman Investments. This is State of the Markets, our monthly feature, where we look at all the market's internal data, do a deep dive into it, try and cut out all the noise that is around from all the narratives, decode and convert that into the market signals that really matter to us. Before we dive in, our statutory disclaimers. Moneyman Investments is a SEBI registered corporate research analyst with registration number INH 00002538 and BSE enlistment number 7017. Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Registration granted by SEBI, membership of BSE, and certification from NISM in no way guarantee performance of the research analyst or provide any assurance of returns to investors. You can also read our detailed disclaimer on our website www.moneymaninvestments.com. Let's dive in now. So, this is how the market looked. And I prefer to look at the markets from the lens of our proprietary quant tool, which I call as a quant market map. The legend here describes what happens, what denotes what. But essentially, what we are seeing is that after a great month of April, the markets got severely overheated. Look at all these dark reds, and then became super volatile. This is what you see, a lot of directionlessness and also a lot of volatility. A trending move would have been greens. A downward trending move would have been only reds, but we saw a mix, which means that a lot of volatility, a lot of ups and downs that happened in the market. Now, this tool actually pretty well summarizes what happens in the market and also gives very key turning points in the market. Like, on Wednesday, we had a small sign of an overheating, and on Friday, the next trading session, there was a huge sell off in the last half an hour. This is how the entire month looked like from a Nifty 500 point of view. This is a heat map which has been sorted as per market cap. Now, see what is happening here. Like I said, it's a mixed bag. That is very clear. What you would love to see is that look at all the heavyweights. The bigger boxes are the ones, the companies with higher market cap, and also these are the ones that have the highest weightage in Nifty 50 because they are the large caps, right? So you see the Reliance, the TCS, the HDFC Bank, the ICICI Bank, the SBIs of the world, and even the others like Bajaj Finance, Axis Bank, Hindustan Lever, Bharti Airtel. They're all red. There's been a huge sell-off with SBI really leading the charge downwards, and this is why the indices have been behaving like this. My favorite term is that indices are not equal to markets, and nothing shows this more than this. Have there been positive activity? Has there been positive activity in the market? Of course, yes. Look at all the greens that you see. There have been a lot of pockets of activity. I maintain that this is becoming a stock pickers market and not a general market where bullish conditions will prevail and everything will go through. And a lot of selling is happening in the large caps right now. This is something that everyone needs to know because indices are what people track, and this is how indices are managed in a way. So they don't give the correct picture. Let's look at the historical returns of Nifty 500. I always prefer to take Nifty 500. The reason being that it represents broader markets. It includes the Nifty 50, the Nifty Next 50, then mid caps and then small caps. So there's a wide representation of all the market caps in this Nifty 500, and that's why I don't look at Nifty 50 alone. May, as I've said before, is one of the most volatile months of the year, and it has proved itself once again. The volatility is just sky high in this particular month. And while generally it tends to end a bit positive, but the point is that it's hugely volatile. And this volatility needs to be stomached. We've already been through this. It's over. What needs to be seen is June. The month is usually it provides a respite from the huge volatility. Volatility comes down drastically. In fact, these 3 months, June, July, August, usually bring about a great time period in the markets. And as you know, that leads to a sell off in September, which of course we'll talk about when we reach there. And we've seen in the last few years how September has always more or less acted as a month where, things get spoiled. But, anyways, you're starting with the late 3 months of June, July, and August. And June usually has a smooth, low volatility, good win rate move. That is how it looks like. Look at how June has behaved over the last 5 years, 15 years, and 25 years, just taking returns over these time periods. Generally been a positive month, and that is what I expect out of June for this particular year also. Let's see how it unfolds, of course. Geopolitical issues kept aside. Usually, this provides a good opportunity. The month of May and its high volatility is over already. Let's see how June unfolds, but this is what I'm expecting out of it. Let's come to what happened in May. Look at the indices. This is such a mixed bag. Nifty has really come down while mid caps have really taken off, and small caps have not done badly either. They've done pretty much well. And if you look at data for the year, this is for the calendar year, and this is now we are 5 months down for the in the calendar year. Nifty is still really floundering. So is the broader market, which is represented by Nifty 500. But mid caps and small caps are leading the charge. People who are part of my WhatsApp channel would have known about this a long back because I've been talking about this. I've been seeing these trends since March, and that's what I've been telling people that it is a time to tank upon mid caps and small caps. That trend is clearly visible. Look at the breadth. Overall, for large caps, mid caps, and small caps, we are seeing decent breadth in the markets, and it is good. This dotted line is basically what needs to be crossed for the markets to have trending moves. And right now, we are seeing that happen in mid caps primarily. Look at the overall strength in the indices, and you will see that mid caps clearly are leading the charge, followed by small caps. While Nifty and Nifty 500 are still, they are not in a bad condition, but it's not great either. So you know where the action is in the market when you look at all the indices. It's important to understand this and cherry pick this because it allows you to get a clear view on what is really moving in the market. Talking about overall markets, see how they have behaved. Looking at an overall market breadth, we are seeing that things have been turning healthy over the last about couple of months, and that's a good thing to happen. And this is something that we've been waiting for a long time, and it's good. Having said that, April was a blockbuster month, honestly, for the markets after a very, very bad March. So, March was extremely bad, April was extremely good, and we saw a lot of moderation from April to May. So, these are metrics of market breadth and how they have moved from April over here to May. As you can see, that things got pretty overheated in the markets towards the end of the uh, month of April, as I showed with my market map tool. And there was a healthy cooling down, which is very, very good. Look at returns distribution for the month of May. Uh, a few months back, we were seeing all these bars stacked up in the below 0% intervals. You would remember from my earlier, state of the market presentation that all of them were stacked up towards the left side. Now we are slowly seeing things start moving well. What we see here is also a lot of stocks which the biggest bar is in this interval, which is 0 to 5%, and you'll be shocked to know that most of this damage happened not during the month but during the last trading day of the months, that is last Friday's last half an hour. That was also the day when that was also the period when MSCI rebalancing happened and huge volumes happened. Lot of stocks came down drastically, and you would be shocked to know that this bar is more or less entirely constructed only in the last half an hour of the last trading day of the month. So you can imagine how markets are really susceptible right now, and look and how volatility is playing a key role in this. Having said that, we are seeing that there are healthy build-ups that are happening on these intervals also. The month of May is over. We'll have to see how this builds up. But what I'm expecting for June is a lot of build up on the right side of these intervals, which is above the 0%, that is positive returns intervals. That is what I'm expecting to build up. And as you can see, large caps have been more weighted towards this side. Uh, Mid caps are a mixed bag right now. Small caps are also weighted towards this side a lot, but we'll have to see because small caps have actually been showing great signs. Mid caps are, of course, leading the charge. The market has been forming a lot of net new highs. It's a great sign to see. Look at these. These are for the day and for the week. What you see here, these bars are actually not daily readings, but for these 5 days, it is a weekly readings that is recorded. So let's ignore that for a bit. But having said that, we saw great, healthy net new highs being formed just towards the second week of May. The market suddenly dipped, as you can see here, and then again there has been a steady build up, and the last day again, like I said, there has been a dip. So this also gives you an idea about how the markets are doing on an overall basis. A good healthy bull market will see a lot of stocks making net new highs more and more. This is another metric that I use, which I call as the advanced decline velocity index, which basically shows how stocks are moving up and how fast. You can see the month of March, and it's a 3-month rolling index that I construct. The construction is proprietary, so of course I can share the construction in case anyone is interested. But this shows how the month of March, went down into the dumps towards the end of March, and then right from the beginning of April, things started moving up, and see how things have been sustaining well. So this shows that this is especially for the naysayers, the people who disbelieve that we are punched in a bottom. This shows that the bottom is more or less firmly in place. This particular part. You don't have to see only the index chart. Other internal data metrics also point towards the same. So this is something that we have to take into cognizance and keep in mind, because it is a time to deploy money into the markets, and we will keep getting these opportunities more and more. Again, a similar picture when we look at how stocks are placed vis-a-vis their moving averages, which is one of the most important metrics again that I track after what I have shown in the last slide. You will see wherever you see red is when it is a danger mark. That is, more number of stocks are below their 4-week and 10-week moving averages. Greens are where the percentage of stocks are above both of these critical key moving averages. The other two are more or less no man's land. So essentially focus on the reds and the greens. It's been color coded for easy comprehension. Till the end of March, you will see huge reds. The entire chart, the map is taken over by reds only. And that is when I've said multiple times that it looks like we are towards nearing the end of the bearish trend. We are looking at the markets punching a bottom. I was expecting that to happen somewhere from towards the end of February. It took a bit of time, but that's okay. The point is that that has happened, and see how the greens immediately took off in April. And when I say that April was a blockbuster month, it was a blockbuster month. See how it took off. Now we are seeing greens more or less dominate, and that's a good thing. This again shows it from a different lens, which is percentage of stocks away from their 52-week highs. Again, March, you will see that the number of stocks close to their 52-week highs are extremely low. And that that metric, jumped straight into April and has maintained through the month of May. That is the most important message over here. The first two parts, the dark green and dark blues, this constitute, which shows that about 38% approximately of stocks are within 20% of their 52-week high. A good metric will increase with markets becoming better and better. Basically, we are just saying that it's a good time to be in the markets, and it's a good time to see markets going up further. However, not everything will go up together. I've been saying this for a long time. It's a stock pickers market. It's going to be a sector pickers market. And more than anything else, this particular chart shows how things have been moving. Not a single month where you see the top five has been more or less clear in term and consistent in terms of the winners. Different months are seeing different sectors, segments come up in the market, and I'm also observing is that money is getting rotated very fast in this particular market. It's a very important thing. You'll have to capture trends. In fact, we are not seeing one particular sector continuously go up. And you will also not see going forward for this entire calendar year. Already 5 months down, we are clearly seeing a trend that is forming. It is important to identify which next sectors are building bases and which are the ones that are going up. In fact, for this particular phenomenon alone, which is called sector rotation, we have a specific product which addresses this aspect and takes into account only the fast moving sectors, the ones that are trending up, and stays invested in that. You can go to my website and check out that product. It's a very interesting product. It's a low cost product which uses ETFs. Pretty interesting product. Anyway, this is how sector performance look like. And this is again a proprietary tool that I use to identify sector rotation, where I basically slot all sectors into four broad categories, which are the momentum leaders, which are the base builders, which are the distribution traps. This is something that people need to be very, very careful about and avoid, and which are the structural laggards. The idea is to try and be in these. These are the next ones that are expected to move here. These particular distribution traps are the next ones that are expected to move here. And you can see how the entire market is spread out. You would also see that I marked Nifty 50 in this particular thing. You will see Nifty 500, which is bordering on a distribution trap right now, but it's okay. And mid caps are clearly leading the charge. Small caps are also forming good bases. So which ones will go up from here is something, of course, that my product will address. But this gives a clear idea about where money needs to be positioned in the for the coming at least couple of months, and where money needs to be avoided from. Now, you will notice one thing that these bottom two quadrants are where your old money is just invested in. These are the areas where money has been blocked. It needs to move out of that. Remember that. That is the key to outperformance in any market. That you get out of the laggards, don't enter into the distribution traps, try and enter into base builders just before they go and become momentum leaders. This talks about how different investment styles are performing for the calendar year 2026. There are various investment styles in the market. Not all investment styles work in a given year, and it is extremely important to understand which style is taking off. For example, last year 2025, it was all about value buying. This year, while it has taken off, we are yet to see it leading the charge. What is very significantly observable here is that size, that is small size. Size refers to small size. That is something that is picking up very fast. Right from April, see, that is the one that has been the first one to bounce off. What is small size? The representative of that is a small cap index. Remember that. And I'll cover this at the end of the presentation also, where I'll show my most favorite slide that I've been tracking for the last about 3 months or so. We are also seeing momentum start gaining. This is where excitement builds in the market when momentum starts, and you'll see trending moves. But right now, this is where I'm keeping my eyes on. In fact, we have a couple of more products. We have total three funds. A couple of funds take into account different factors and trying to ride the top factors. You can see the details on my website, which is www.moneymaninvestments.com. So anyway, these are how the investing styles look for this year. I expect that these two will lead the charge. That is what is expected. It was more on this as things unfold. Oh, there's my favorite chart for I think for this entire year. This is what I'm going to track. I've made a separate video on this. You can go through this. It is available on my YouTube channel, which is of course free of cost, as is my WhatsApp channel also. I just post information on the markets, on the general markets. Uh, what I'm expecting, and I'm going to cover it very briefly here and not try to get technical, is okay. So this is the ratio chart between small cap index and the Nifty 500, which is the broader markets. We have not been seeing small caps outperform the markets in a big way from 2018 onwards. That is when this peak happened. It's not 2020, it is 2018. And in December 2024, they did punch in a brief intermediate peak, but it's been in a broad consolidation range, but it's trending up, and it's a good thing to notice. Now the point is, this is what I expect this to do. Above this green line, when this ratio chart shoots up, we will see small caps going absolutely berserk. And that is where individual portfolios will start outperforming the market. That is where a lot of excitement will build, and that's where a lot of wealth will be created. Remember that India is yet to create 99% of its wealth. And this wealth will not come from large caps. They will go up. But it is the small caps, the mid caps, that will really create the wealth. And this is what I expect it to unfold in this manner over the next few months. Of course, this is not going to happen overnight because this is a monthly chart. Also remember that. So please do view that video that I have put out. It's a detailed analysis of this, and you will understand why I am very particularly bullish on small caps for this calendar year and maybe even half of next year, next calendar year. Uh, in case you're not part of our WhatsApp channel, this is a great chance for you to be part of it. Scan this code. It's a free channel. I post a lot of market info, insights. Uh, a lot of times it's on a real time basis, especially when markets are turning around. It gives you a clear idea about what to focus on in the market and cut out all the narratives, cut out all the noise that is there. A quick word on what we do. Couple of frameworks that we stand by, very, very, like, these are the bedrock. This forms the bedrock of all our investment management activities. One is our ethos framework, where we stick by these six broad uh, rules or tenets, you can call them. These form our ethos, and for our clients we ensure that all of these are taken care of. There is a short video that I made on this. This is again available on my YouTube channel. You can look at that. It is also on my website. You will get to know what is the ethos framework and why do we stand by it, and why it is important for every investor to stand by these ethos, whether you are investing through us or investing by yourself. So do go through it. I would advise for you to also understand how money can be managed in a better way. This is our investment framework. You already know about this, how we incorporate a lot of metrics into our three different products and eventually come at a strong, robust, agile portfolio. Again, there is a short video made on this available on our YouTube channel. You can go through it. But essentially, the idea is to filter the entire market and all the stocks through multiple protocols, reject most of them, use certain parameters to select them, especially strength and sector. These form the core of our entire investment framework, and then uh, come to like a solid portfolio. So you'll get to know more about this from our video. That's about it for this particular feature of State of the Markets. More is coming up. Stay tuned. Please do join our YouTube channel. Please do join our WhatsApp channel. Do go through my website. There's a lot of stuff that I keep posting. Whether you're a client or not, it doesn't matter. I think there is a huge knowledge gap for individual DIY investors, do it yourself investors. And my idea is also to try and plug that. So, all this stuff that you see here will help you do that. This is our disclaimer. Please do go through it. It's also available on our website. It's our statutory disclaimer. We are SEBI registered, as clearly mentioned over here. And it's always great for you to only engage with SEBI registered entities and no one else. Thank you very much for your time. I hope these 20 odd minutes were well spent, and more coming up soon. Thank you very much. Have a great time.